Welcome to Power Charting. I'm your host, Bruce Fraser. Are industrial stocks greased for a run? For that, with that question in mind, we have a very special guest host today, the one and only Johni Scan. John, thanks for being here.
Great to be here, Professor. What a title, Greased for a Run. I have got a scan for you, Greasy Lightning in the industrial sector.
Oh, I love it. And I'd like to point out, too, that our guest host, Johni Scan, is also an amazing Wyckofian. And so not only does he do great scans using indicators and so on, but with an orientation oftentimes towards Wyckoff and the Wyckoff method. And so we will be looking for those characteristics today with this scan and also just in general. But let's get started. And so just a quick announcement coming up June 22nd, 29th, and July 6th, trading through the business cycle with my mentor, my dear friend of many, many years, Joe Turner, a incredible business cycle analyst and tactician for how to use business activity and for investment purposes in the stock market. So it's going to be terrific. And just go to wyckoffanalytics.com to learn more. And also the end conference is coming up. We're going to do a swing trading workshop on day one, and William and Roman are going to do an intraday trading workshop on day one. And day two is just full of great activities. So, and Johni Scan is going to be one of the presenters at that. And so, John, we're looking forward to seeing you there.
I'm going to unpresent for the unconference.
Okay.
Whatever that means.
Yeah. Well, let's start with, we're going to talk about industrials, but let's start with just a comment about the Big Eight. Now, you'll see 9 thumbnails there, but we count Google as one of the Big Eight. And the idea here is I just want to point out that we've had a magnificent run into the end of the quarter. So here's the quarter right here. And there's a very sharp advance in May and climactic action. And John, I'm seeing climactic action in Google. I'm seeing it here in Meta. Microsoft, you can see a climactic acceleration. Apple, right there. And it just goes on. And I believe what this means from a Wyckofian perspective is that there's the climax is exhaustion, and that in the last month of the quarter here in June, we're going to see institutions starting to, they can't sell their Big Eight, but what they can do, because they've expanded so much in value, is that they can reduce holdings. And so they might sell off some, probably just a little, of their holdings, but these stocks have such huge market cap that they will, the money raised from these stocks in this acceleration phase, these institutions are going to move into more value-oriented segments of the stock market. Thus, our conversation today. And so, John, your thoughts on this?
Absolutely. Been such value enhancements in these Big Eight over the year. They really have driven the rallies, and certainly just performance metrics on a portfolio, percentage allocations and things. They may need to trim these, not because they aren't great stocks, but simply because their charters or their guidelines require that this position, single position, not be more than a certain percentage of the portfolio. That could be driving a lot of the simply performance metrics in the portfolio itself.
Perfectly said. And like here, I'm just drawing this on Microsoft resistance and support. When you get a climax like this, an acceleration, you oftentimes, even if these stocks are going to keep going higher, will go into a range bound situation. And so this range bound situation, I believe, is what we could see going forward. It could be that the third quarter of the year is marked by these big eight, basically marking time, trading, going sideways, building a new cause for a new move later in the year or next year. So let's go to the mid cap and the small cap, because something interesting is going on here. And I just would like to point out in the S&P 400 mid cap index, middle capitalization companies, is that you're seeing a swing trading structure developing here. And this swing trading structure, which came out of this area and currently, as of the 7th, was at 2570, is that it has a count just on the swing trade that takes it up to 2843, 2882, and this would go above. Now, this is June a year ago right here, this 6, and look at the resistance level. So this, if this can unfold, it's going to bring the mid caps up and out of this structure. And John, what I'm seeing here is potentially a much bigger count. And so this could very well kick off a more important uptrend. What do you think?
Really, you're going back to June, July of 22. And for those folks who don't know, the 6 and the 7 represents the month, and that is of the prior year.
Yes.
So way back, we're almost at
A
11
year ago. Yeah.
months, 12 months of cause that has built up in the mid cap area. Very interesting potential.
So now let's look at a three. That was a one box reversal, which is like for swing trading, smaller time frames. Let's go to a 3 box reversal with a 40-point scale based on ATR from the prior chart, which we used ATR scaling. So we're just using the same scaling, but we just averaged it out to 40. And look at this big structure. You can see here climax, testing, sign of strength, last point of support, potentially, it's not out yet. But let's take a conservative count of this area, recognizing that we could make this count bigger if and when it can climb out of this structure, which we'll call potential accumulation. So it's 13 columns times 3 box reversal method times 40-point scale gives us 1,560 points of upside potential in the mid caps. Where does that take us? So we take that count across that area, 3760 to 3920, currently at 2568. John, does that seem like a worthwhile move?
Very much so.
So really a beautiful potential cause developing, with the caveat that we need to get up and out of this area right here to be able to demonstrate strength, back up, and then go. So we will be watching closely for that. Here is just the vertical chart of the mid cap area going back to May, June of last year. And I put in the Wyckoff labeling, 8 potential labeling for the Wyckoff structure. Here you can see in yellow the swing trading count that we just did on the 1 box reversal point and figure. Here is the 3 box that we just took the count on, so that you can have some perspective of what the vertical looks like. And I would like to just point out, because you know how important relative strength is to me, that this relative strength is starting to really kick into gear. So very impressive. Okay, we got to keep going. Here's small cap, and you can see here the swing trading area for small cap. John, what do you think of what's happened here in what appears to be the conclusion of this structure in the swing trade?
Very promising, leaping bars up and past overhead resistance and coming off a higher low in LPS, a last point of support. very key structural element giving rise to that leaping action. And look at the moving averages, just starting to cross, positive slope on both on the way. A lot of good things here.
Beautiful. Now there's also a much bigger count here for the small cap. And you can see that this, as the conservative count, is potentially we could take a bigger, even a bigger count back to preliminary support. But as we said earlier with mid cap, and there's a huge family resemblance between the mid cap and the small cap, that it's got to show another sign of strength. That doesn't mean you don't campaign these inside the accumulation area, but because the low risk trades are down here towards the bottom of the trading range. But we also look for the markup to begin in a very dramatic way, which potentially could be happening here. So we look at this. Now let's look at the point and figure, and you can see this beautiful accumulation type structure that has developed in this swing trading count. One box, this goes all the way back to March. And what is this count? 28 columns times one box reversal times 10-point scale. And this gives us a count 1390 to 1430, which takes us up and out of the highs that was made in at the beginning of 2023. So I'll leave it to you to do the bigger count, and we are going to just keep going here. Now, here is the XLI, and I really want to just point out this is the industrial select sector, and this sector here, you can see this beautiful count structure, and here are the highs that were made in 2021, and we are now starting to knock on the door of these highs made back in 21, and we see that the relative strength has been in a really robust uptrend with a climactic surge, taking out the prior highs through here, and it's had a correction. And this correction has come with a very mild sideways type structure on the pullback in price. So this looks very interesting. Rate of change is just hovering around 0 here. So it could start to go back up again. Rate of change here, and relative strength tends to be more volatile, slightly below 0 as relative strength went down. But note the 39-week moving average is still rising. This is my classic trend model, and we can see that there's really a case here for the industrials to wake up and really get going. Here's the point and figure chart of just, let me go back. This is just this area right here. And we see, I'll clean this up, that there is a count potential here, and 2 segments that we're going to count. This goes all the way back to late 22. This first segment goes 115, 116, and it's 19 columns times one box reversal. Second segment across this area, here's that selling climax. That's the low support level at 96. And that is 37 columns and gives us a count to 133, 134 from 100. And that is only looking at the backing up action and not the entire potential accumulation structure. So I would say that this has a lot of really good potential. And last thing, and then I want to get to Johni Scan because we'll run out of time here, is just to look at the bullish percent. Here's the industrials, higher lows as price goes sideways, higher lows in the energy sector as price goes sideways. And you can see that consumer discretionary is rising with a rise in the bullish percent. I'll let you study these. Materials are quite interesting. Positive divergent behavior as prices are dipping slightly. Same with transports. Look at here, lower low and then a higher low. What we look for with bullish percent is a combination of oversold and then directionality. And all of these are pointing upwards right now. So that's all we'll say at this time about this. Maybe we can come back to it at a later time, later date. But anyway, with this, I'm going to pause. Oh, one last thing I want to show you, and that is the Russell, because this is another area. The idea here is that as the big 8 stocks are being slightly cashed in by institutions, that money is flowing to where value is. We're making the case that mid cap, small cap, industrial, economically sensitive companies like the small cap Russell 2000 are where the value is. And so here you can see a beautiful swing trading case study here, building a cause. And this is across the 167 and the 178 area for the count line in the low. And it counts up to 200 to 211. And that is only part of a much bigger count potential. And with that, we're going to pause and have John take over. We always like to turn to Professor Scan, Johni Scan, for how we can scan for these ideas, see more good ideas in less time. And there's nobody better than Johni Scan for creating these very straightforward, intricate scans that are elegantly simple in the way that they work. And so with this, John has a scan for us. And John, take it away.
Thanks, Professor. We're going to take a quick look into the industrial sector. So notice our first scan line is group is industrial sector. That's going to limit the universe of potential stocks to the industrial sector alone. We're going to ask for some level of strength. So a scooter over 70 gives us an indication of some strength. And the real important line is the third line. It's highlighted. ROC 5 greater than ROC 10 times 2. That means the 5-period rate of change has to be double the 10-period rate of change. So if we're looking for acceleration, the near-term rate of change, double the longer-term rate of change. We're going to rank all these by scooter. So let's see what that gives us. Here is a very interesting Rolls-Royce. Not normally what we would think of, PLC, British company, aerospace. Look at the move up off the October lows, big gap, February, March, climactic action giving us a range-bound condition, which we're looking at possibly moving up off the lows there. What are your thoughts here, Professor?
Well, extremely low price stock at under $2, but note the market cap is 15 billion. So it's very much a mid cap, and the beautiful run off the October lows really has kicked in the relative strength, which is that red line underneath. And so classic pause, backing up type action at key resistance from late 2021. So this is really a very interesting structure, classic industrial aerospace company. So a very interesting idea. But
So
keep in mind that it is a very low price stock.
Well, you can own a slice of Rolls-Royce for under $2. Not bad.
Brilliant.
Our next is AAR Corp, aerospace. Again, a little bit thin, small cap, but look for the acceleration near term. And we do see a very strong move up towards resistance. Consolidation area, a little bit flagging on relative strength. Balance of volume is flattened out, but still high, positive there, and up near the highs of a longer term range going back to early first quarter of the year, March, April. Your thoughts here, Professor?
Again, another backup occurring after a breakout from April, May of 22 and consolidating there. That's I think of as a bullish structure because it's not giving up ground, where in May of 22, it went down in two stages quite dramatically from the low 50s to the low 30s. And here, it's pretty much held its ground. That's a classic Wyckoffean setup. And the thing I'd like to point out about the context of this great scan that John did is he's looking for stocks that are starting to change their behavior from going sideways to all of a sudden dramatically jumping. And that's a contextual Wyckoff concept that shows that the trading range is over and the markup is ready to begin anew. I love the way this is making these lower highs here, March, April, May, but very, very subtly, and it has a bit of a hinge type quality to it. And now it's broken out that downtrending, very short term 3-month structure, 2-month really, and has the promise of breaking out here.
Absolutely. Let's take a look at our next stock, another from industrial aerospace. This is Hexcel Corp. Again, mid cap here, a little bit thin on volume, but look at the structure that is formed on top of the old structure. Nice move on the upsloping moving averages, had a little pause on the 50, but that's starting to go back up again with the acceleration off the 68.45 level right up to old resistance 74, 75 area. Lots of good things here. What are your thoughts, Professor?
Such an interesting stock because there's a low that was formed in December of 21, higher low in June 22, higher low in October 22. And this whole area, starting with that climax in March of 21, is potential cause forming for a new uptrend. And note the jumping up and out of this consolidation structure, a potential reaccumulation, and then a high level pause, range bound, and now it looks like it wants to accelerate up into the old 2023 highs and potentially start a new uptrend. Very interesting stock.
We have a next stock from a different area altogether, JELD-WEN, building materials, windows, doors, other types of building materials. Lower volume here, EMA 10 of volume, just under 500,000 shares, but big move down, October low. We have a structure that formed at the rising 50, which was still well below the 200. We didn't get back above the 200 until February, and the stock has struggled a bit with a rising 50 but declining 200. So we're waiting for both of those to turn up, but in the meantime, very interesting structure around the $15 level for resistance. And look at that almost parabolic move up of late off the test of the 50. Tiny pullback today on low volume. Very interesting potential here. Your thoughts, Professor?
Very interesting cyclic structure after an important downtrend with accelerating lows into June of last year. That to me looks like the climax. Automatic rally into the end of July, and then this very, very persistent secondary test into the October low. And that, so I believe that 1212 area in June represents a very important support level. Draw a support line along there. 1801 at the end of July is the resistance, and now it's walking uphill into the key resistance that would be the top of the accumulation area. I think the stock is very interesting. Good one, John.
Another interesting one from the building materials, Gibraltar steel. Here we have a much longer gradual move up. 50's been above the 200 for a considerable period of time, way back to November, the cross. Now we have positive slope on both. getting a nice lift on the balance of volume. And look at the takeoff from that test of a rising 50 over a rising 200. Really like what we're seeing here. Your thoughts, Professor?
Well, I turn attention to the relative strength there, and you can see that the relative strength has been in a gently upward stride since the middle of 22, and now it's tested the moving average from above. Looks like it's trying to accelerate, and it's taken out some key prior resistance, higher highs and higher lows in price, literally since September of last year. So this is an uptrend that could accelerate. So I really like the look of this. Very interesting. And we only have about 30 seconds left. I just want to ask you, we've looked at other sectors like materials, transports, energy, and so on that all have interesting promise. You could run this scan on those other sectors also to find ideas like this, couldn't you, John?
Absolutely. Just change the group line and you're in whatever sector is available. And that's how easy it is.
John, final thoughts before we sign off.
Great to be with you again, Professor, and really enjoyed the show. Thank you much.
Great stuff. And thank you, John, for being here with us. And everybody, we will see you next time.